Fidelity announcing plans to increase its free index fund offerings. The company plans to launch the Zero Large Cap Index Fund and Zero Extended Market Index Fund later this month.
The Large Cap Index Fund will track indexes of large U.S. stocks, while the Extended Market Index Fund will track the total return of small and mid-sized U.S. companies. Fidelity's move following the launch of its first two free index funds last month and cutting fees on its existing index-based stock and bond funds. And we go back to the conversation, Mike, about where this is all going. Is it going into free trading?
Yeah, it reflects the ongoing pressure, obviously, but I also think it reflects Fidelity's conclusion that the way to get customers' attention is to tout how cheap your products are, as opposed to, it used to be you tout performance. These are obviously index mutual funds, not exchange-traded funds. You already have to be a Fidelity client, so it's all part of the whole package of just attracting assets to the firm. And on that level, it makes sense, but I don't know that it means that the entire industry is going to zero.
I guess, Mike, on one level, it shows the huge price competition amongst these guys and why you want to have scale if you're in asset management at the moment. On the other side, does it potentially mark the top in the shift from active to passive funds if now all of the big guys are so aggressively pushing out these products? Might that show that we're now going to have a swing back to active?
I don't know where you would call that point on the pendulum where it's at its extreme, but it obviously reflects the fact that almost everyone is leading with passive or asset allocation type funds, not beating the market type funds. So yes, it seems like it's gotten to pretty much a consensus point that that's where. But look at the stocks of the asset managers. They're beaten down. Legg Mason, affiliated managers, even BlackRock to some degree, Janus Henderson. They are really in the dumps, and you would never think it's a bull market looking at those because basically structurally the stock picking industry has seemed to be on the outs.
iShares rang the bell today here.
They did.
Reminded me, given that it's financial crisis week, by far the best deal had to be BlackRock buying with BGI from
no doubt about
Barclays.
It.
If Barclays hadn't bought Lehman, would have had more capital, wouldn't have had to sell that. Lots of ifs and buts, but gave them all this scale and exposure.
Also, BlackRock bought Merrill Lynch Investment Management
as well.
Another great deal at that time.